Welcome to Matters Financial and Geopolitical from the Frontier. I hope the week's going well. Ours has been busy, I must admit. Currency markets, euro dollar hovering around the 113.80 level. It's up about a figure. Post Powell dollar index 96.695. Japanese yen, that strengthened 113.29. Swiss franc 0.9927. We were nudging parity. The pound 128.32, the Aussie 0.7318, India rupee 70.025, South Korean won 11.1965, the Real 385.08, Egyptian pound 17.909, South African rand 13.738. That strengthened. Euro dollar, I'll put up a 3-month chart. I'm still of the opinion we're going to 106 and then 113.80 levels. Euro US dollar Q4 2018 forecast distribution, little surprise where we are. 111.70 is key according to this from Sun Chartist. Gold, that got a bit of a bounce, 12.25 now, dollar coming off, gold gets bought. The $50 barrier is now in serious danger for US crude. WTI plunged $1.27 to $50.29 a barrel. Briefly touched $50.06, but has recovered a little bit. Strong cocoa processing demand will probably compensate for bumper West African crops to leave the global market balanced this season, according to Dutch trader Cocoa Neck to BUB. Large bean deliveries to ports and top producer Ivory Coast are likely a sign of the bigger than expected crop to time production, and number 2 producer Ghana is also set to expand, said Max Göttler. Processing demand will prevent the market from experiencing a significant surplus. Ivory Coast deliveries are running about 37% ahead of a year earlier. I don't think anyone expected them to be this strong. The question is it just the size of the crop, or is it the profile as well? I think there should be an element of both. Cocoa futures traded in London fell 6% this month, while the New York contract slipped 5%. As bean deliveries were bigger than previously forecast, still prices are trading below the 5-year average, spurring demand from factories that have seen a measure of processing profits known as the combined ratio trade near the highest in a decade for most of the year.